Welcome back to the Algobot channel, where we take apart automated trading strategies and study how they actually work, line by line. I'm your host from Algobot, and in today's session we're exploring an expert advisor for MetaTrader 5 called Directional Power Expansion. This strategy blends a MACD-based momentum reading with a self-scaling volatility threshold band and a trend baseline, all to study when a market is genuinely pushing in one direction rather than just drifting sideways. By the end of this video, you'll understand the indicators behind it, the exact entry and exit logic, and how its risk controls are structured. Remember, this is educational content only and not financial advice. Let's dive in. So what is directional power expansion actually trying to do? The core idea is that most bars on a chart are noise. Price wanders back and forth, and only a handful of moves carry a genuine one-sided thrust that's worth studying. This expert advisor is designed to measure two things on every closed bar and only signal a trade when they line up together. The first piece is what the strategy calls the power line. It's built from a MACD line, which is simply a fast exponential moving average minus a slow exponential moving average. But instead of reading the MACD level directly, the strategy looks at the bar-to-bar change in that MACD line, scaled up by a sensitivity factor. That change is essentially momentum acceleration. It only grows large in one sign while price is genuinely pulling away, and it flips sign the moment the thrust stalls. The second piece is the threshold band. This is the width of a Bollinger band, calculated as 2 times a multiplier times the standard deviation of closing prices. Think of it as a live, self-scaling measure of how much movement the market is currently allowed to make. A move only counts as a real directional expansion when the power line pushes all the way through this volatility band. On top of those two, there's a slow baseline exponential moving average that acts as a direction gate. So the strategy never studies a long position while price sits below its own longer-term trend, and never studies a short while price sits above it. Risk is handled entirely with the average true range, which sets both the stop loss and the take profit. In terms of who this style suits, it's built for traders interested in intraday, momentum-driven approaches on a single time frame, and it reads whatever chart it's attached to, working well on something like Eurist on the 15-minute or 1-hour charts. As always, trading carries real risk, and losing trades are a normal part of any approach. Let's walk through the mechanics step by step. On each newly closed bar, the strategy first calculates the MACD line for the current bar and for the previous bar. It subtracts one from the other to get the change, then multiplies that difference by the sensitivity input, which defaults to 150. That gives us the power line. A positive value means building bullish power, and a negative value means building bearish power. Next, the strategy measures the threshold band. It takes the standard deviation of closing prices over the band period, which defaults to 20 bars, and multiplies it by 2 times the band multiple, which defaults to 2.0. That produces the bandwidth, the amount of movement the market is currently allowed. There's also a third filter called the dead zone. This is the average true range multiplied by the dead zone ATR multiple, which defaults to 0.15. Its job is to mute quiet, choppy conditions, so a weak flicker in the power line doesn't count as a real signal. Now the strategy checks its conditions. For a long, 3 things about power must be true at once. The power line must be positive. Its value must be greater than the bandwidth, and it must also be greater than the dead zone. On top of that, the direction gate must agree, meaning the closing price sits above the slow baseline exponential moving average, which uses the trend period of 100. When all of that lines up, the EA signals a buy. The short side is the mirror image. The power line must be negative, its magnitude must exceed the bandwidth, its magnitude must exceed the dead zone, and the closing price must sit below the baseline moving average. When those align, the strategy signals a sell. Risk management is fixed on the average true range. When a buy is placed, the stop loss sits 1.5 ATR below entry, and the take profit sits 2.5 ATR above, giving a reward to risk of roughly 1.67 to 1. The short uses the same distances in the opposite direction. There are 3 ways a trade can close. It can reach its ATR take profit, it can hit its ATR stop loss, or an opposite power surge can act as an early exit while a position is open. Finally, once a trade moves 1 hour in the money, set by B trigger R, the stop is pulled to the entry price, so a reversal after that point costs very little. The strategy never adds to an open position. Let's read through the MQL5 code as if we were sitting in MetaEditor. At the top are the input parameters you can adjust in the strategy tester. Fast period and slow period define the two moving averages behind the MACD power line. Band period and band multiple shape the volatility threshold band. Sensitivity scales the tiny MACD change up onto the price scale, and dead zone ATR multiple sets the chop filter. Trend period is the baseline moving average, and the ATR settings define the stop, the target, and the break-even trigger. Below the inputs are the four gate variables. Notice how bull power requires the power value to be positive, greater than the bandwidth, and greater than the dead zone, all in one line. Bear power is the exact mirror, using the negative of power. The align up and align DN flags simply compare the closing price against the baseline. Now look at the buy block. When bull power and align up are both true, the EA reads the ask price as the entry, then sets the stop loss 1.5 ATR below and the take profit 2.5 ATR above, before calling send order to place the order. The sell block, in the else if, is the mirror image. When bear power and align DN are both true, it reads the bid price, sets the stop above and the target below, and sends the order. At the bottom you can see send order itself, which calls trade.buy or trade.sell with the lot size, symbol, and those ATR-derived stop and target levels. That's the whole entry engine in just a few clean lines. Let's bring the whole strategy to life on this illustration. On the price chart you can see our candles, with the blue baseline exponential moving average, the 100-period trend gate, weaving through them. Below the price is the subpanel showing the power line in gold, with the upper and lower threshold bands drawn as dashed levels and the zero line in the middle. Remember, this power line is momentum acceleration, and it only reaches into the colored expansion zones when price is genuinely pushing. Look at the first three candles. Price is drifting sideways and slightly lower, hugging the baseline. Down in the subpanel, the power line is limp, hovering near the zero line and even dipping slightly negative. There's no expansion here, just noise, and the strategy stays patient. Notice the second and third candles making small, indecisive bodies. This is exactly the kind of chop the dead zone filter is designed to ignore. Now watch the fourth candle, the one marked with the buy entry. Price snaps up with a strong bullish body and closes back above the blue baseline. So the direction gate now agrees with an upward move. At the same moment, the power line surges upward and pushes cleanly through the upper threshold band into the bullish expansion zone. That's the exact condition the strategy waits for. Positive power, greater than the bandwidth, and greater than the dead zone, with price above the baseline. All the pieces align, and the buy entry marker prints. The stop loss is placed 1.5 ATR below entry, and the take profit sits 2.5 ATR above. Follow the next two candles. Price keeps expanding higher, and the power line stays elevated inside its bullish zone, confirming the thrust is real. As the trade moves 1R in its favor, the stop is quietly pulled up to the entry price. So from here the position is protected against giving much back. Price then reaches up to the take profit target on the candle marked take profit, and the long study is complete, closing for a gain of 2.5 ATR against a 1.5 ATR risk. Now the character of the market changes. On the 7th and 8th candles, price stalls and rolls over, and the power line rotates back down towards zero and then turns negative. The upside thrust has clearly stalled. By the 9th candle, marked with the sell entry, price closes decisively below the blue baseline, so the direction gate now favors the downside. Down in the panel, the power line drops through the lower threshold band into the bearish expansion zone. Negative power, magnitude above the band, magnitude above the dead zone, and price below baseline. The mirror image short condition is satisfied, and the sell entry marker prints. This time the stop sits 1.5 ATR above entry, and the target sits 2.5 ATR below. The final candles show price sliding lower with conviction, the power line holding inside its bearish zone. Again, once the move clears 1R, the stop trails to break even, and price then reaches the downside take profit target on the candle marked take profit, closing the short study. So across this single illustration, you've seen both sides of directional power expansion. a long when upward acceleration expands through the band above the trend, and a short when downward acceleration expands through the band below it, each managed by the same ATR-based risk framework. This is a simplified educational example, and real markets rarely move this cleanly. That brings us to the end of our breakdown of directional power expansion. Today we explored how the strategy builds a power line from the change in a MACD line, how it measures a self-scaling threshold band from Bollinger-width, and how it only signals a trade when momentum acceleration expands through that band while price agrees with the baseline trend. We also walked through its ATR-based stops, targets, and the automatic move to break even. Everything here is for educational purposes only and is not financial advice, a recommendation, or a solicitation. Trading involves real risk, and losses do occur. If you found this analysis helpful, please like the video, leave a comment with the strategy you'd like us to study next, and subscribe for more MT5 strategy breakdowns. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.